To tackle the effects of the global pandemic, governments across the world passed massive stimulus bills. But that triggered inflation fears as central banks had to print more money to pay for those programs. That sent cryptocurrencies like Bitcoin soaring. Investors, including in Turkey, got caught up in the craze and many lost millions to unscrupulous traders. Now, Turkey's central bank is researching the blockchain technology that powered cryptocurrencies to see if there's a safer option. For the first phase, the bank will create a prototype digital Turkish Lira network and conduct limited tests with technology stakeholders. If all goes to plan, a cloud-based Turkish Lira could one day provide the conveniences of a cryptocurrency without the risks. And it's not just Turkey. Some of the largest economies in the world, like the US, China, and India, are also testing such platforms. So, is this the future of money? Are blockchains going to replace paper currencies? And to discuss the future of digital currencies, joining me now from New York is Taha Arvas. He is an economist and the former vice chairman of the Capital Markets Board of Turkey. And from London, Daniele Bianchi. He is an associate professor at Queen Mary University of London. Gentlemen, welcome to Straight Talk. It's good to have you on the program. Daniele, why have the world's central banks been exploring digital currencies or CBDCs? What pushed them to search for an alternative platform?
Well, I think there is a variety of reasons depending on the countries you look at. For instance, you have developing economies that are ultimately looking at CBDC as a way to improve financial inclusion. There are millions of unbanked people in emerging economies. While on the other hand, you have so-called developed markets like Europe, UK, the US, North Europe in particular, which are basically almost already cashless societies. So they naturally look at CBDC as a way to further improve payments, market efficiency, and transactions more generally.
So, Taha, what's the latest in World Central Bank's research, experimentation, or development of this platform? Which country takes the lead, and where does Turkey stand?
China takes the lead currently, but to be clear here, only the second country to have started a pilot program in digitalizing physical currency is Turkey. So Turkey is number 2 in the world after China in starting this program. Obviously, in Turkey, no decisions have been made yet as to what the final outcome will be. This is research on how we can turn paper currency, the money we have in our pocket, to a digital, even offline, both digital and offline type of currency. So it's very exciting. It's going to be very interesting. But like I said, the world is just very newly adopting these things, and Turkey is the second to adopt a measure after China.
So, Daniel, how important is the integration between the market and the technology, and what kind of difficulties did the central banks face before this digitalization?
Well, it's very important. I think one case in point is, in fact, Canada. Canada is pretty advanced in the CBDC experimentation, but just as a sort of a backup plan in case a private cryptocurrency comes up as a primary method of payment. So the integration between markets and policymaking institutions is crucial, and is a non-trivial argument for a variety of reasons, from the legal aspects to technologies that are developing very quickly, privacy aspects and the likes. But definitely, it's a very important aspect.
So how do you think will these central banks be able to keep up with the pace of ever-developing technologies since they have more established or more slower structures when compared to decentralized cryptocurrencies?
Well, I think the technology is there. It's all based on decentralized blockchain. Well, depending on the type of CBDC you look at, for instance, China is a sort of a hybrid system. The krona in Sweden is a retail CBDC at the end, but the technology is there. I don't see that the speed of development that's happening in the private cryptocurrency markets is not necessarily a good indication of the speed of development that it's happening in central banks. The technology, I think, is there and has been experimenting since many years now, many central banks globally. So I don't think it's going to be an issue, the technology per se.
So Taha, is this a complementary move by central banks in all around the world, or is it aimed at bringing the cryptocurrencies under some sort of control?
Like our previous analyst said here, there are different models. It's very important to note that we're not talking about moving the digital currency that currently is digital. So the money in your bank is digital. Everyone knows that. You can exchange it through apps or through bank transfers, etc. We're talking about the physical paper currency being turned into a digital currency, but digital doesn't necessarily mean online. In fact, in most cases, it's going to mean offline. For those who don't have bank accounts, for those who don't have internet access, it's going to require a physical network of hardware to facilitate this. So the relevance with cryptocurrency, I mean, there are some ties, but it's very loose. So it's more of a step towards modernization in general, because there are many negatives, obviously, of cryptocurrency, as we may all know. So this is something else completely. So I wouldn't say it's complementary. Maybe it's just trying to keep pace with the speed of technology.
So if proved, Daniele, successful, what kind of advantages will these boards bring? I mean, what kind of impact they will have on, for example, cash control, market efficiency, and balance of payment?
Well, you name it. So I think the main advantages is efficiency of the payment systems. It's going to be probably cheaper and quicker. We should recall that now most of the digital payments are in the hands of private institutions at the end, such as American Express, MasterCards, and the likes. So this is going to put things a bit more in control of governments. And ultimately, the goal, as I said, really depends on the country where you are at, but ultimately is increasing payment efficiency, improving financial inclusion, capital control for some of the countries. I think China is an example for this. So those are ultimately the benefits that I see. There are cons, though, which has to deal with the macroprudential aspects. So financial stability, the role of intermediaries, privacy. There are quite a few things that are tricky. That's the reason why central banks are heavily researching into this topic.
So, Taha, could this new system help countries at odds to overcome their differences or drive even deeper wedges between themselves? I mean, how will this affect the world politics?
One of the things that's going to happen is going to be that the movement of cash that's probably gained through illicit gains, through illegal aspects, will come closer under control. So you can have now, if you have $100 million in cash, you can do a lot with that. If currency becomes digital, it's going to be much harder to do that. So maybe this will help globally the role of those who gain money through illicit gains, kind of pushing them out of the system or making it more expensive for them to act, if not impossible to act. So in that respect, I think governance will improve. I think relations between countries and people acting in the best interests of their nations will only improve.
So, Daniele, how have cryptocurrencies changed the world's finance system and the people's perspective of making money? I mean, is making money out of, for example, cryptocurrencies or digital currencies a sustainable way to move forward?
I think the perception changed over the last decade, especially the new generations. If you see the average age of owners of cryptocurrencies in the US and Europe is much lower than the average age of stock owners, for instance. So it's a market that is sort of designed for the technologically savvy, if you wish. So the new generations at the end. So the perception change. Now, the aspect of making money, I think it's complicated because there are as we all know that there are, issues and pros and cons in investing in cryptocurrencies. It's a very complicated and fast-moving market.
Taha, one of the most traded cryptocurrencies use more electricity than many countries. How could a fully digitalized financial system impact the environment in the future?
The one thing is going to be that this type of the more efficient technology becomes, the more digitalized this ecosystems becomes. It will only improve these things. There will be, yes, cryptocurrencies through mining waste, gigawatts and gigawatts of energy. That's definitely the case. But this move will make things more efficient. Imagine if you take cash and you go deposit at your bank, you wait in line, you deposit the money, someone processes that gets uploaded somewhere. So that whole process potentially will disappear. So traditional banking, as we know it, will very soon disappear. Definitely in our lifetimes, probably in the next decade, banking as we know it will completely change. And this step towards digital currencies is a major step towards that.
All right, gentlemen, unfortunately, we'll have to leave it here. Thank you very much for joining us on Straight Talk.